Test. Okay, this is Russ Squire with Big Sky Property, or excuse me, 1031 Property Exchange. And we are on to part 2 of 1031 exchanges for accountants and tax preparers. So let's move on with it. 5 basic rules for 1031 exchange. One, both the relinquished property and the property being acquired must be held for productive use in business, trade, or for investment purposes. 2, the proceeds must be exchanged through a qualified intermediary. That's a safe harbor under the guise of the 1031 guidelines. A qualified escrow account must be used to hold the relinquished property proceeds unless the exchange is simultaneous, but you don't see many of those types of exchanges anymore. They're usually always a delayed exchange. 4, all cash proceeds from the relinquished property must be reinvested in the replacement property or you create taxable boot. And number 5, the replacement property must be subject to an equal or greater level of debt than the replacement property, or the exchange will have to pay taxes on debt reduction or put up cash to offset the lower debt level in the replacement property. So those are some of the basic rules. Business. Well, by turning client problems into solutions using 1031 as a tool. So here are some examples. A client has raw land producing no income and no write-offs, and now they're retiring and need income. So your solution, sell the raw land and use it to purchase multifamily rental housing, producing positive cash flow and depreciation allowances. Plus they don't lose any of their capital base because they did a 1031, kept the whole pile intact. Say the client has a primary residence in a fourplex and wants to move to a warmer climate. Well, your solution using 1031 could be that the client sells the primary residence using a 1034 exemption, sells the fourplex using a 1031, and then maybe buys a bed and breakfast someplace like Arizona using both 1031 and 1034 exclusion dollars to create that dream. So there are a whole lot of ways to use 1031 to help create creative solutions to client problems. Some other superstar examples, say client owns a primary residence debt-free in a duplex worth $215,000 with $135,000 in debt and wants to build a move-up home. So their single-family home is worth $460,000 that they currently own. They have a signed buy-sell for $145,000 on a piece of raw land. So your solution using 1031, client sells the duplex, client then purchases the raw land. Using a build-to-suit exchange, they put well, septic, and road on the lot with their remaining equity dollars from the duplex. Now at this point, even though they've done some improvements, there's really no evidence to the contrary that the new property is anything other than an investment or a potential rental. Now if they file 2 consecutive tax returns on that property, in year 2 they can convert the raw land to personal use and acquire a construction loan to continue building their replacement property. At the end of 2 years, they sell their primary residence using a 1034 rollover to pay off the construction loan and convert the new land and building to a primary residence. So another example of a way you can solve a client's problem by looking at the whole picture and what they have and what their goals are and what they want to accomplish. And once again, by solving people's problems, you can become a superstar. So other examples of superstars solving grandma and grandpa's desire to be near their children and grandchildren. Here's an example. The trend back toward semi-nuclear families is on the rise somewhat. You're seeing a lot of parents being moved in closer to a younger couple with kids, that kind of thing. So you meet a young couple with 2 preschool children who have a strong desire to own their own home. And so being consulted professionally, you ask, well, where do your parents live and do they own any investment property? Bingo. Now that's the right question because it's a broad picture question. And a quick phone call and they disclose to you that they do own actually a fourplex in San Diego, and you talk with them and discover they're tired of tenants, toilets, and trash and managing that property, and then you could show those parents how to convert that equity to a second home that they could rent to their grandchildren. And as you know, based on IRS regulations, they can rent that home for up to 20% below market. Now they can visit as often as they like and even gift their children $14,000 a year per child or spouse to help them make the payments for the rent or save up their own down payment. Now, After 2 years, this elder generation could convert the home to a personal residence tax-free because they've met the 1031 time holding frame. But um, when you look at the overall picture here, what problems did you solve? I mean, the grandparents now get to live near their children and grandchildren. The young family was able to save up enough of a down payment for their home, a home of their own, thanks to the gifting strategy, and they buy that home through, you know, to satisfy that goal at the end of the 2-year holding period. And you're much appreciated for being the trusted advisor. So it's a win-win-win. Other superstar examples, buying a dream home in a nice resort area tax-free. So your client wants to own a vacation home in a nice resort. They inform you someday they might even want it to be a primary home, and they further have rental property they're willing to sell to buy it. So your solution using 1031, client has two options here. They could either buy the home using a 1031 exchange, place it in a vacation rental pool. Now they can still get 2 weeks a year of personal use for marketing and maintenance visits, and can pick up another 2 weeks of personal use. So could use it for up to 4 weeks a year legally. Or two, they could rent it to a family member for 20% below market rents, gift that family member the money to pay rent, and then use it as often as they like. But after 2 years time frame of holding it as a rental, they could convert the property to personal use and still meet the 1031 exchange time holding requirements. So, one of those strategies could very likely appeal to your client. If you have a problem, you become a trusted advisor. Ranch broker conservation buyer strategy. Ranch brokers often encounter different types of buyers, but a lot of land in the Rocky Mountains is appreciated to the point where traditional uses sometimes are tough to justify the price per acre. So these buyers could use a combination of 1031 exchange coupled with conservation easements. Now the easement doesn't have to get done prior to purchasing the property. I mean, the value of the easement credits certainly would be valuable down the road as well, but the easement credits, when combined with a 1031 exchange, can often allow a buyer to purchase a large tract of land for far below what the actual listing price is. So, attorneys, accountants, appraisers, familiar with the development and initiation process of conservation easements, do need to get brought in early, but because they can have a timeline that lasts for months, but that doesn't have to slow the sales transaction, assuming that the buyer has the cash to close that deal. But, once again, combination conservation easement and 1031 exchange can oftentimes help an affluent buyer get into a piece of. So how do you position yourself as a 1031 exchange expert? Well, you can certainly get your business cards printed with the words 1031 exchange specialist on them. That opens conversations about what a 1031 exchange is, how it can benefit the client, what the other properties they own. And you always want to take a client's property inventory. Of course, preparing their taxes, you should be, filing their Schedule E's and 8824s and all that good stuff. But it's part of their wealth building process, so you should become involved. You could host seminars on how to sell your property with no taxes. Network with trade associations and property investors. Get to know property managers in your area because they usually know first when a client's going to be selling an investment property. Network with attorneys and realtors, and then use our website, 1031 Property Exchange, as a tool. We've got tons of educational stuff there for your clients, all the tax forms you could possibly need, regardless of the state that the property's in. Hosting seminars is awesome. Get Microsoft PowerPoint software, just build a seminar in PowerPoint. You can buy or borrow a projector. You're welcome to borrow ours. Invite experts as guest speakers, attorneys, realtors, qualified intermediaries like ourselves. Secure a location, school, library, hotel, conference room. Send out an invite to all your past clients and prospects, and put an ad in the paper. Learn how to sell your property with no taxes. Hold the seminar. We'd be happy to join you if it fits in our schedule. And like I said, you can even use our projector that works with a laptop. It works great. Nobody else does this, but then as an accountant, you get more business. People view you as an expert and somebody who can help solve their problems. So networking with trade association and property investors, home builders, especially spec builders, developers, they need good accountants. Many are building homes they live in for 2 years, establish a primary residence, sell the home, use a 1034 to avoid dealer status. Real estate investor groups or associations grow your business. Network with real estate attorneys. No advisors out there have more control over their clients than attorneys. And they generally are the first to know when a client will be selling an investment, rental, or business property. So they're great sources of referral business. You build those relationships and maintain them. And if you do it while business is good, business will never get bad. I work with certified commercial investment managers. Now we have a couple here in Bozeman, but certainly they're all over the country. But CCIMs are a wealth of knowledge when it comes to replacement property with good capitalization rates, and that's an important aspect of 1031 exchanges, especially for owners of ranches and multifamily, commercial, and larger pieces of raw land that are looking. They may not be as familiar with investing in these types of properties, but somebody who's a CCIM can really help educate them. They can also help you find types of clients you'd like to have as clients, because they do require a lot of accounting. Now, you might not be a commercial property expert, but networking with CCIMs can help you earn you referred accounting business. And if you want to visit their site, ccim.com. So in part 3, we'll go over the advantages of using 1031 exchange. This is Russ Squire from 1031 Property Exchange.